Good day, class. We are happy to be here once again. From the last lesson we did, we had already looked at the sources of limited liability company, which we said are loan and overdraft from the banks, from shares raised by shareholders, equipment leasing, retained or plowback profits, trade credit. We said trade credit, raw materials can be bought on credit. And then when the production has been done and the sales have been done, the company can now pay those who have given them raw materials on credit. We talked about here hire purchase, and we talked about factoring. That means they can release their debt and sell off their debt for cash in order to gain some money. Today we want to quickly go on and look at the advantages and disadvantages of private limited liability company. Please note the advantage and disadvantages of private limited liability company differs a bit from that of the public. When we talk of private limited liability company, you remember we said private limited liability company consists of between 2 to 50 people coming together to form a limited liability company. The advantage of a limited liability company, a private limited liability company, is that they can get between 2 to 50, between 2 to 50 people can come together, harness their resources, and start a business. And so they are able to get large capital, to source large capital within those we refer to as the promoters of the company. And then number two, we said it has a limited liability company. Private has a legal entity. That is, the company is separated from the owners. Their liability is limited to the amount of money they had invested in the business, which made their liability, that means their personal properties cannot be sold to pay off any debt that may have occurred. Then we said shareholders have limited liability. That means their liability is limited. Then it's a separate entity, a legal entity that it can sue. They can sue and be sued. They can sue and be sued in their own name, in the name of the company. Then we said there's continuity, number four, continuity of existence. Because they have come together, different promoters have come together to establish a company, a limited liability company. They have continued existence. There's continuity of existence. They can continue as long as the people want. If you remember, continuity comes in because when we were looking at the sole proprietorship business, we said that if the owner of that business dies, the company may also die along, and the company can go into extinction. But in a limited liability company, even if one or two of the shareholders or the promoters die, the company, there is continuity. The company can still continue to flourish and do well, even in the absence of some of the shareholders. It is, number five, we said, it has efficient management. What do you mean by efficient management? Because people are coming together to contribute their skill, experience. Definitely, it is better managed than a one-man business because it has that nitty-gritty of collecting different ideas and skill in order to see that the company is waxing stronger and stronger and making a lot of profit. A private limited liability company has large profit. It can diversify. It can go into different sections and then make more money. Therefore, they are able to make more money and make more profits. Possibility of expansion. From the profit they have made, they can diversify. They can go into different aspects of the business that will generate more income for the company. And that's what we say that there's possibility of expansion. They have the capital, they have the wherewithal, they have the entrepreneurship and the skill which can be used to expand. It enjoys internal economies of scale. What is economies of scale? That means they can diversify into different sections. They can go into different, they can have what we call backward and forward integration, which will expand the company. What is backward and extension integration? That means if it's a company that uses agricultural product, it can establish a farm, thereby producing their raw material in order to feed their industry and then expanding to increase their production. Again, by having their own farm through what we call a backward integration, they are reducing the cost of production because they will be producing their raw materials in order to feed the company and thereby be able to make more money. For example, Liver Brothers can establish a palm oil farm industry, thereby producing the raw material they need to feed the industry. That's as far as the advantages are concerned. When we talk, they also have what we refer to as disadvantages. A private limited liability company has a disadvantage. One of the disadvantages is that they have limited capital because they cannot sell their shares on the open market. They cannot sell their shares to the public. Their capital is only limited to the amount of money they can realize from the promoters or those who bought shares. And they are limited to the maximum of 50 people, unlike the public, which have infinity. Then number two disadvantage, the shares are not sold to the public. The shares of a private limited liability company are not sold. They cannot sell their shares to members of the public because it is a private limited liability company. Remember, we said a private limited liability company. We have its name ending with LTD to indicate that it's a private limited liability company. Number two, we said that shares cannot easily be transferred. Cannot be transferred from one person to the other. It's very, very, on rare occasion, you have such happening because it is part of the regulations that is embedded in the running of the company. They don't just want to transfer people to transfer their share unless under strict supervision that can easily be allowed. There's lack of privacy, and that's another disadvantage. Why do we say lack of privacy? Because it is a must. They must publish their statement of account. They must publish their account so that every member of the organization must have access to the book of account of the company, thereby making it very, very open to all the shareholders or promoters to know what is happening within the company at any given time or the other. Number 4 or number 5, they must pay corporate tax. If they don't pay corporate tax, then the company may be sealed up by the FRC, Federal Inland Revenue, or the tax, or by the government itself, if it fails to pay corporate tax. That is tax made on their business transactions. So they must pay company tax. Not only that, it has another disadvantage, which we refer to as number 6. It does not have personal contact. There is less personal contact between the customer and the employer or the producer. Unlike the one-man business, that there is closeness, or partnership business, there is closeness between the customers and the owner of the business. But in a corporate, in a limited liability company, there is lack of personal contact. You may be an employer and you may not even have any contact to even know or see the promoters or the owners of the company once there's no cause for such things. And so there's lack of personal contact between the workers or customers or those who are the owners of the company. And finally, there's delay in decision making. Number 7, delay in decision making. Delay in decision making. In decision making. In decision making. There's delay in decision making. Why is there delay in decision making? Before any major decision can be made, those concerned, the promoters, will have to meet. Series of meetings have to be done before major or crucial decision can be made. Unlike the one-man business, if the owner of the business, he can decide to take decision on any issue at any given time, which quicken or hasten the decision making. But in a private limited liability company, they must form a quorum. That means if the total number is 50, at least they must have 25 or 27 people present before a major 26 or 27 or more people meeting before a major decision can be taken, and by the board of directors. So this tends to waste a lot of time before major crucial decision is taken. Please, for further reading, I want you to read for the next lesson, Public Limited Liability Company. That's what we'll be looking at in the next lesson. And please follow the trend, and please, in your notes, make some jottings or write a short note on what you have done for your own reading, personal reading. Have a wonderful time. God bless.